I'm Owen Bigland. This is the Inside Edge video blog. Okay, this isn't one of the most popular or my favorite type of blog to do by any means. But unfortunately, 2-3 times a year, I have to talk about taxes. And, it's endless. There's always new ones along the way. Let's face it, coming out of COVID here and the deficits that our governments are running, both federally, provincially, and locally here with the City of Vancouver, taxes have only got one way to go, and that's up, and they are. So I wanted to just bring to your attention a couple of things that have been in the news lately on the tax front here. The big one is there is now talk about the federal government, the Liberals and Justin Trudeau, with the help of the NDP, the support of the NDP and the Greens, are looking at increasing the capital gains tax from the current 50% to 75%. And I'm going to say that this is probably inevitable. It's going to happen. Currently, we're running, last time I looked here, an article I was reading a couple days ago, close to a $1.5 trillion deficit in Canada, and that's only growing coming during this COVID time. Who knows what it's going to be at this time next year. I guess the good news is that, as you guys know, I blogged about it in the summer, they were also looking at possibly removing the principal resident exemption or looking at ways of taxing home equity on your principal residence. Well, it looks like the good news is that is off the table for now. Looks like CMHC now is backed off on that, even though they claimed at first, they lied that they weren't looking at taxing your principal residence. It turned out they were. But that apparently now is on the back burner for now. But let's face it, they're broke. The Liberals are spending even before COVID. Sure, that has driven up the deficit a tremendous amount with the CERB payments and everything else. But they were already running huge deficits and spending like drunken sailor well before COVID hit. $1.5 trillion, it's the highest we've ever been in debt in Canada here, and it's only getting worse. So, as I said back in the summer, that principal residence exemption is a pretty sacred thing. Trillions of dollars in there. Many Canadians, the vast majority of Canadians, is the only real asset they have. They don't have any money in a TFSA or an RRSP, and most don't have a pension. All their assets are in their home. And to take that away would be pretty devastating for a lot of people. So for now, they put that on the side burner. But we need to come up with some money, and we need money fast. So it looks like, and I think that we will be getting a capital gains tax increase from 50 to 75. It hurts. What are you going to do? Apparently, it's going to raise about another $8 billion, $8 to $10 billion a year. Now, I don't know even if that is enough. That's why I say that principal resident exemption, who knows, 2-3 years, that could be back to the forefront, depending on how long COVID lasts and what the full repercussions and ramifications are with COVID and how many trillions of dollars we end up getting into debt. So, for me and a lot of my investor clients, both in the real estate market and in the stock market, this is hundreds of thousands of dollars for me. I'm getting used to it. I've blogged about it many times before. I'm in a 50% tax bracket. I cut checks to Revenue Canada well into 6 figures every year. What I should point out to people too is I often get a lot of people will comment or sit in the YouTube channel here saying, I don't know if I want to invest in this or that or buying another investment property because I'm already in a high tax bracket and I'm going to have to pay 50% to Revenue Canada. Never look at it that way. When you're paying 50% or 48.5% to Revenue Canada in your marginal tax rate, it's a good thing. When you're shelling out that kind of money in a high tax bracket, it means you're a high income earner and you're successful. It sucks to have to write those checks, but it's a problem that's nice to have. I complain about it, but deep down, hey, when you're earning the kind of money and investing in investment income and real estate income and having to pay half to Revenue Canada, so be it. It means you're doing what you're supposed to, you're making money, you're successful, and you're getting better. But the capital gains tax for me and many of my clients is going to be hundreds of thousands of dollars for me because I've got properties, you guys know, that I've held for 10, 15, 25. I've got several properties that I've held for upwards of 30, just over 30 years. So I've got a lot of money sitting there in capital gains that Prior, if they do increase it here, I would have been paying at a 50% rate. Now I'm going to pay it at a 75% rate. So that's hundreds of thousands of dollars to me. But hey, what are you going to do? The other thing I'll say is, I've often said I was blessed, as everybody was here, most of my watchers, born a Canadian, born into a country as great as Canada that gives you every opportunity to succeed. The sky is the limit here. And that's something I always pound home here when I was reflecting back on Canada Day here. You've got untethered potential here. You can make as much or as little as you want in this country. I pay a lot of money in taxes, but I also lead a nice lifestyle, and I've been blessed to be born a Canadian and having those freedoms to make that money. So it's going to probably come without much warning. Expect it maybe later this fall or early next year, but I do think that the Liberal government here, with the support of the NDP and the Greens, are going to put through a capital gains tax increase from 50 to 75%. The only thing I would say to people, I'll talk a little bit, the principal residence exemption for now is on the back burner. But with the trillions of dollars we're into, don't be surprised that in a couple more years that's back to the forefront again. It's that old, like in the movie Jaws, $8 billion is not probably going to be enough with the capital gains. We're going to need a bigger boat. And that bigger boat, don't be surprised if that principal residence exemption is back on the table again. We'll have to see where it goes. The only thing I would suggest to people is if you were thinking about selling your principal residence in the next 3 or 4 years, let's say, that was the plan, you were going to sell it, downsize, retire, whatever. You just may want to push that up just a little bit to play it safe, to get that full exemption, especially if you've got $2 or $3 million sitting in there. That's huge. But you never know down the road with the capital gains principal residence exemption. Could be back on the table. Another one here. NDP and our Premier Horgan announced a couple weeks ago the allowable rent increase for landlords in BC into 2021. And it's getting more pathetic every year here. So this year, the allowable increase is 1.4%. 1.4%. So, I'm not going to get a lot of sympathy here from people because, let's face it, more than half of Vancouver residents are renters. So this is great for them. They don't want any rent increases. But I'm just going to go through it here. I think even a renter has to look back at this and is this really fair to the mom and pop investors? It's not. It's not even close. It's a travesty, really. But I'm not going to get much sympathy with this. The other thing I'll tell you is I don't use these rent increases anyways, as I've done many blogs on in the past. I let my tenants stay in there, and I will jack up the rent to back up to market rates when they give me notice and move out. And if that's 2 or 3 years, that's fine. 1.4%. Now, up for the last several decades, I've done several blogs on this. We have always gotten by with the CPI, which is the inflation rate, plus 2%. So over the last 5 or 6 years prior to last year, a landlord was allowed to raise the rent 4.75%. Last year, our NDP government said that's just way too extreme, even though the cost to hold real estate are going up far greater than 4.5%, way more. They decided we're going to eliminate that plus 2%. We're only going to allow you to increase your rent by the CPI, Consumer Price Index, the rate of inflation. Last year, I believe it was 2.4%. This year, they're tabling it down even more, ratcheting it down. And this is what socialist governments do. They just keep grinding you down because, hey, the guy who owns real estate, he's a fat cat. Just tax him to death. They've got all kinds of money. So let's step back and look at it here, especially going forward here with all that's going on with the insurance, the property taxes in Vancouver. They're allowing a 1.4% increase, yet the cost to hold these properties in Vancouver, and for the most part in Lower Mainland here, are going up probably double digits. The insurance alone, as you guys know, has gone up on average probably 100%. But I've got stratas. I just sold a strata on Alberni Street here not long ago that went up well over 200%. I've seen many stratas that have had 150 to 300% insurance increases. Strata fees have been going up pretty close to double digits. Even when you back out the insurance, which makes up a big portion of that, strata fees are always going up 6-7% annually, minus the insurance. because the concierge, the janitorial services, all the cost to hire the property managers is all going up every year. Property taxes in Vancouver. Where do I start with these? I mean, the city is broke. They've already said that they're going to be doing pretty much double-digit increases here for the foreseeable future. My property taxes went up well into double digits last year. So everything is going up far more than 1.4%. But here's the thing, our premier and our mayor of Vancouver, Kennedy Stewart, they have no respect for the individual landlord, the mom and pop investor, let's call them. They have no clue the service that the individual landlord provides here in the Lower Mainland. And what I mean by that is that I'm going to say that 90%, maybe 95% of the individual rental stock that is out there is not held by institutional investors or the city. It's held by small individual mom and pop investors that might own 1 to 5 units downtown or in New Westminster or Richmond or Burnaby. The City of Vancouver, as people know, has not built any rental housing for decades up until a few years ago. Most of the rental stock is dilapidated old 40, 50, 60-year-old wood frame buildings in the West End. It's only been recently that they've convinced developers, which they didn't want to do, but they gave them enough incentives that, okay, we'll build you a damn rental-only building here, purposely built. So they built a few in the West End. There's a few more coming. There's a few down in the downtown East Side, Chinatown area. But these are market rents. They've given huge incentives to developers because developers don't want to get into rental properties. They want to build strata. They want to buy the land, build the building, pre-sell them, give the keys out in 3 years and move on to another project, make their money. They don't really want to be in the rental business, but the city has given them enough incentives that we'll take a few on. But again, these are at market rent. I'll give you an example. There's a couple down on the West End right now near English Bay. A 1-bedroom there is running around $2,000, $2,100 a month for no parking. They're okay, but here's what I would tell you, that if you were looking for a 1-bedroom and your budget is $2,100 or $2,200 a month, and you have your choice between a rental-only building, a newer one, let's call it, in the West End, or an individually owned unit in a strata where you're renting from an individual landlord, you're going to be far better off, in my opinion, for most of the time, renting that from that individual landlord in a stratified condo. For the simple reason that it's a stratified condo, it's probably 50, 60%, 70% owner occupied and maybe 30 or 35% tenant occupied. Much better living environment, I can tell you, over the long term. When you're getting into these rental buildings, they can be okay. They're new, some of the newer ones. But remember, it's a continuous churn, non-stop, of tenants coming in and out because they're not owners, they're all tenants. You never know who your neighbor is. It's a lot harder to control who's in those buildings. I think for lifestyle and just for overall living enjoyment, you're far better off renting from an individual landlord in a stratified condo as opposed to a purposely built full-time rental building. But they finally started to build a few. But the mom and pop investor provides the vast majority of quality housing downtown and in the Lower Mainland. Good luck trying to find and if you want something like a townhouse or maybe even a luxury condo, a 3-bedroom or something with water views or something with much better amenities, you're dealing with individual landlords. So the city, of course, and the province has no clue about any of this stuff. Just gouge them. Everything's going up, double digits, but we're going to let you have a 1.4% increase. So listen, the thing that I'm not losing any sleep over, I've done, go back and watch my blogs on this. I don't raise my rent by the 2.5 last year and the 1.5. When I get a good tenant, I let them stay as long as they want to stay. If they're not bothering me, they're taking care of the place, I just leave the rent the same. Eventually, all tenants will give you notice. It might be 2 or 3 years, which is great because I don't have to worry about anything. And when they do give you notice and move out, that's when I will raise the rent back up to market rate. And if that's another $200 or $300, that's fine. Not everyone does it the way I do it. And in some cases, I've had sales lately here where we've had to sell a unit because rents tend to go in surges, I find, where they might stay flat or go up a little bit, and then they take a big jump over 18 or 2 years. And that's what happened back around 2016, 2017. We had a big surge in rental rates there. And in some cases, a landlord might have put a tenant in just prior to that big surge. Now they've been in there 5 years or 4.5 years, and they're probably paying $500 below market rent now. In that situation, for sure, you have no choice. Bump it up the 1.4%. So if the guy's paying $1,800 a month, you can charge him a whopping $20 or $18 more a month. Still never going to get you anywhere near where market rent is, but you don't have any alternative. But eventually what happens here is if they stay that long and you miss that surge in rent, eventually the landlord has to say to himself, well, geez, maybe I should just sell it. Put it on the market and sell it. And that's what can happen sometimes, because they just can't get that rent back up, and the tenant knows it. He's never going to move out, because he knows if he does, he's going to have to pay $600 more a month for what he's got right now. So think about that for a minute. There's lots of things at play here. The chances of me listing that and selling it to another investor are slim. Chances are 75% of those buyers are going to be principal residence buyers when I do sell it. So there's another unit that's off the market in the rental pool. But of course, City of Vancouver and NDP provincially here, I don't think they even know the service that the individual landlord does. But for me, I'm not going to lose much sleep over it. None. Because again, I play it where I just raise the rents, keep good tenants, don't bother me, just as long as the checks keep coming in. I know eventually they're going to move. They all do. I've been in the investment market here, renting condos for 33 years now. So I got a lot of experience in it. Eventually, no matter how low the rent is, they'll eventually move on. They'll get married, get a girlfriend, need a bigger place, and then you can raise the rent back up. But 1.4%, not a good look. I mean, everything is going up double digits. Just the final thing I'll tell you on the Vancouver property taxes here as well. I've done many blogs on it here over the years, because people will complain about, property taxes are too high in Vancouver. But I've often told people that, listen, property taxes in Vancouver up until recently, and we'll have to see where it goes, have been very on the low side compared to a lot of jurisdictions in the world and in North America. The way they get us, as I've always told, is they gouge us on our income tax rates. We get crushed here. We have some of the highest in the world for taxation on individuals and income. The Vancouver and Canada in general have always encouraged people to buy their own home, which is the right thing to do as opposed to renting lifetime. So to do that as an incentive, they've kept property taxes moderate, let's call it. But they kill us on our income tax. Give you an example, and I've done this before. If you were to go to a state like Florida, go to Miami. If you were to buy a $1 million condo in Yaletown here, your property taxes currently on that are probably going to be about $4,500 a year, let's say, using ballpark number. That same $1 million condo down in Broward County or Dade County in Miami, that same $1 million condo is probably going to be about $18,000 in property taxes. So about 4 times what it is here. Now the difference is that in Florida, they don't have a state income tax. You only pay federal. So you get a huge break on your earned income. In Canada here, it's the reverse. We pay through the nose on income tax. So having the property taxes low here was really one of the only benefits we had, that and the principal residence exemption. But now, of course, just too good to leave alone. The City of Vancouver's broke. They're pumping $1 million a day into that black hole known as the downtown east side. We need money. And where can we get it from? I know. Let's tax the homeowner. And that's what they're going to do. So expect double-digit increases here on our property taxes in Vancouver and Richmond, everywhere, moving forward. It'll take a while before we get to where it is balanced out, where we're killing us on taxes and killing us on our property taxes, but that's the way it's headed. We'll have to see where it goes. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.